Welcome to Value Vest Daily, where we deep dive into the best value and momentum investment opportunities. Today, we're looking at a fascinating company called Zeta Global. They're at the absolute epicenter of a massive shift in digital advertising, and they just might have the answer to one single, gigantic problem that's keeping marketers up at night.
So here it is. This is the multi-billion-dollar question, folks. You see, for years, these little things called third-party cookies have been tracking you across the web, powering the entire online ad industry. But they're going away. Google's phasing them out. So what happens next? How do brands find you? Well, answering that question is exactly where Zeta Global's story really gets interesting.
You know, the end of cookies isn't just some small tech update, it's a complete reset of the rules. It creates this huge data vacuum for advertisers, making it way harder to find the right customers. But as any savvy investor knows, every huge disruption creates winners and losers. And this challenge? Well, it also creates a massive opportunity for the company with the right solution.
And here is that proposed solution. Meet Zeta Global, ticker symbol ZETA. This is an AI-powered marketing platform built from the ground up for this new reality. Its entire model isn't based on tracking you with those old-school cookies, but on using its own massive, consented database to help brands connect with people. It's a whole new playbook. So what's their secret sauce? What really makes Zeta different from the pack? It all comes down to one core concept: their data moat. Now, this is the heart of their competitive advantage, so let's really break down what that means and why it's so powerful.
The foundation of this moat is just sheer mind-boggling scale. I want you to let this number sink in for a second. 2 billion. That's the number of consumer profiles in their proprietary identity graph, all built on consented, first-party data. This isn't data they're borrowing or renting, it's theirs. And in a world without cookies, owning your own data is like owning all the gold.
Think of a data moat like a real castle moat. It's a competitive advantage that is incredibly difficult for anyone else to build. It took Zeta years and tons of capital to gather this much consented data. And here's the kicker: they feed this unique data into their AI, which lets them predict consumer behavior and help their clients find customers way more efficiently than competitors who are now scrambling to figure out this post-cookie world.
So how do they actually put this incredible data moat to work? It's all done through their Zeta Marketing Platform, or ZMP. Think of it as an all-in-one command center. It manages all that customer data, runs campaigns across every channel you can think of: email, social media, even connected TV, and it uses cutting-edge generative AI, like their Athena agent, to optimize everything on the fly. And check this out. Their One Zeta strategy shows that customers who use 4 or more of these channels together see way better results. That's sticky.
A great story and some cool tech is one thing, but we're here to talk about the investment opportunity. So, do the numbers actually back up the hype? Let's get into the financials and see what the story is telling us.
Just take a look at this beautiful year-over-year revenue growth. We're seeing a really strong and consistent upward trend here, moving from 23% in 2023, accelerating to 38% in 2024, and the company is guiding for another powerful year of growth in 2025. This isn't a one-hit wonder. This is sustained momentum. Now this is what you absolutely love to see as an investor. For 17 quarters in a row, Zeta hasn't just beaten Wall Street's earnings expectations, they've also raised their own forecasts for the future. That kind of consistency is remarkable. It signals incredible execution from the leadership team, and it's exactly the kind of thing that makes big money investors pay very close attention.
Okay, let's take a quick look under the hood at the company's financial health. Right now, it has a market cap of around $4.1 billion. Now, you'll see some things like a negative PE ratio or negative return on equity. Don't let that spook you. That's totally normal for a fast-growing tech company that's reinvesting every dollar back into getting bigger. The metric to watch here is the positive adjusted EBITDA. That tells us the core business is already generating cash, which is a fantastic sign that true profitability is right around the corner.
So, who's betting on this story? Well, it looks like the smart money is. Between 80 and 85% of the stock is held by institutions. We're talking the big investment funds. And even more importantly, the insiders, the people actually running the company, own a massive 15 to 20% stake. That means they have serious skin in the game. They win when shareholders win. You love to see that alignment. All right, so the tech is impressive and the financials are pointing in the right direction, but no investment is a sure thing. So what does the future hold? Let's dig into the analyst view covering both the bull case and, of course, the potential risks.
So here's the bull versus bear case, laid out side by side. The potential upside is huge. You've got the massive tailwind of AI marketing, the company is hitting an inflection point for profitability, and they're getting more money from existing customers. On the flip side, the risks are real. A bad economy could cause companies to slash their ad budgets. And of course, you've got intense competition from the Goliaths of the space like Adobe and Salesforce.
So what could all this mean for the stock price and for your portfolio? Well, the consensus analyst target for the next 12 months is in that $28 to $38 range. But looking further out, the 3 to 5 year targets get really exciting, with some aggressive models seeing a path to over $150 a share. To put that in perspective, a $10,000 investment could potentially see a multifold return if they execute on that bullish scenario. And if you're a really long-term investor, think about this. Analysts are projecting that in bullish scenarios, Zeta's market cap could grow from around $4 billion today to somewhere between $15 and $30 billion by the year 2030. That is some serious growth potential.
So it really all boils down to this one critical question. Zeta has built a powerful data moat and a super sophisticated AI platform. The financial momentum is clearly there. But in this incredibly competitive industry, is that data advantage truly enough to not just survive, but to win the future of marketing? That's the key question for every investor to consider.
And as always, a quick reminder, this explainer is for informational purposes only and is not financial advice. Please subscribe, like, and share Value Invest Daily for learning about totally unbiased daily opportunities before you put your money to work. Hey, one more thing. Please put in a comment if you want us to deep dive into any specific ticker symbol. Thanks for watching.